Hello, Jeff Green here with a market wrap and market timing analysis for the end of the first week of trading in 2022, if you can believe that. And what a tumultuous week it was. We're going to take a look at the broad markets here, three of the major indexes, and then we'll look at the broad market, the VTI ETF, which is a good representation of what the bulk of the market is doing. I'll show you my lists that reflect what has happened in the Nasdaq and the fact that there's been a huge pullback in technology-related stocks. And then I'll show you where you can get those lists from every week. So let's take a look at the diamonds on the left, the SPY in the middle, and the Qs on the right here. Let's start with the diamonds, even though it's the smallest or thinnest of the major indexes, it garners a lot of attention. So remember that we had this downtrend line here. We seem to have broken above it, and then we're coming back to retest it. Depends what happens here. This might bounce up, might fall down, and then we've got this support here. What's concerning me? Well, let's go through the price action on all of these charts first. The SPY has sort of done the same thing. It broke out. It was really weak, and then it came down below these two support, and is now sitting right on this uptrending lower trend line here. So that's what it's currently sitting on. And the Qs are not doing as well. It broke up about above this downtrend line that I drew in here, and sort of sputtered after one day, came right back down, broke through that trend line without even stopping. It's sort of broken through this level of support here. So the Nasdaq is certainly in a worse condition than the other two indexes. What's concerning me here for the longer term is that we've got these giant towers of selling pressure here. If you look on every one of these indexes, and we'll look on the broad market here in a minute, and we'll see the same sort of thing. So when you see aggressive selling, this is not you and me selling. This is institutions getting out, and institutions are starting to become nervous about not only inflation, but the potential recession that's been bandied about this last week in the media. So this is an ominous development. We need to hold these supports here. This lower line here is a longer term support. If we make it down here, we'll be in a little worse shape, but maybe getting ready for a bounce up. Don't really know. MACD's negative on all these. On balance volumes negative. On balance volumes negative here. I mean, just in general, these are pretty nasty looking charts. So let's take a look at the broad market here. I'm going to erase all my markings, if I can be that clever. And then I'm going to close this guy. And then we'll look at the broad market. So VTI is a very good representation of the broad market. And we've looked at it quite a few times over the last few weeks. And you can see the same thing going here on the broad market. Let me make this a little bit bigger. You can see I've got an alert myself here. And it did trip on this new high last week, but couldn't close above it. So that was a major warning sign. Let me get a pen here, and we'll talk about the same sorts of things, right? So this is the old uptrend line that we've had on the broad market. It's been there for a year or 15 months, something like that. This is the same line on the daily chart over here, so you can relate the charts together. Now, what's interesting about this is we not only have the same type of volume selling on both the weekly and the daily charts, like the smaller indexes, that's a worrisome sign. But if you look at this triangle here, this is going to resolve itself by this time frame. All right, so by the time you get out here, by definition, this will resolve itself in one way or another. So the chances are good we'll get a bounce off here. I'm not predicting that. I'm saying watch for it. I think if it makes it up here, we'll be lucky. I think if it gets down and closes down below here, we might get a bounce up to here. And then if it really does that, then I think we're looking at more downside. So we've really got to close up in this area before I would be comfortable putting on new positions aggressively. I think if we get a bounce here, you might be able to get some short-term swing trades in, but I think that's going to be a little bit risky this week, depending on what happens. You can see, just count how many times the market has hit its head against this resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9 times since when? About November, we've been trying to get above this high, and every time we have failed. None of these indicators look positive. They all look pretty negative to me. You can take a look at these at your leisure. But I think this is a market that could go either way. But my money is betting on the downside unless something very constructive happens on this trend line. So let's take a look at the stock list for this week. As probably most of you know, I publish top stocks for the week every week on my website. I'll show you where you can get those. But this is the current week. This is the Excel spreadsheet of the current week. Let me make these a little bit bigger. And you can go on my website and download this if you would like. I'll show you on the next screen here where to get that. But just look at how this market has changed over the last 2, 3, 6 months. Right? These are the stocks that are now in control of the market. We've got banks, and that's an easy reason because interest rates affect bank earnings. Interest rates going up, earnings at banks get better because there's a buffer between when they start charging you more interest and continue to pay less interest. So they make more money. There's building products, capital markets, construction, real estate is still doing well, although I'm not sure how long that's going to last with interest rates going up and inflation going up. Let's see, what have we got? Healthcare, they're sort of defensive products. Insurance has been doing well for, gosh, 3 or 4 months now. Oil, gas, and consumables doing well. That's part of, in my opinion, the current inflation and the administration's cutback on fracking leases and that sort of thing. And then, of course, down here, we've got semiconductors and semiconductor equipment. I don't think these guys can lose very much right now. I mean, there's such a shortage of chips, and that's projected to last for a year or two into the future. These guys are just making money hand over fist because of shortages. They're bringing new equipment and facilities online. Intel, which is not on this list, but it's just around the corner from me, they announced about 6 months ago they were going to invest $20 billion in new chip manufacturing equipment. That's a huge amount of money, and that's why these guys are still on the list. But these are pretty much the only technology stocks on the list. If you look at technology in general, you'll see a large underlying rot in most of technology stocks. You may have noticed that in your portfolio, but nevertheless, that seems to be what's happening. What's notably missing off this list are things like the FANG stocks, Facebook, Apple, Netflix, all those stocks that were so hot 6 or 8 months ago. They seem to have fallen off the list. They're not bad companies. They're just not very bullish right now. They're still profitable, but the charts don't warrant new positions in those sorts of stocks. So that's the list. Beware of earnings. Earnings for most of these stocks are right around the corner. This is the projected earnings date, and this on the daily chart is a number of bars between that date and when I captured this list, which was Friday. So let me show you where you can get this list. You can go to my website whenever you would like. I publish this list every week, and you can find them at this tab right here, Top Stocks List. So if you click on that guy, you'll see a little explanation about how the lists are put together, and then you can see every week. Now, of course, this is last week's list, so by the time you read this, fiscal week 2's list will be up there, so you can go back at your leisure and just take a look at these lists. And if you are interested in top ETFs, you can find the same thing over here. Yeah, come on now. So the top ETFs, and funnily enough, if you look at this week's list of top ETFs, there's quite a few bullish ETFs around, reflecting the rotation into more preferable stocks by the big players. So that's it. Please like, subscribe, and share this video. If you get any benefit from it, I would really appreciate that. And I'd like to wish you a great week trading, and we'll talk to you next weekend. Thank you.